All right, this is MVB, and this is Mastering the Market Structure, a series that is very lovely. Every trader has to master the market structure to be profitable. Yes, I say that. Every trader, doesn't matter you're the pro trader, you're the beginner trader, you're intermediate, it doesn't matter the strategy you're using, you need to master the market structure to be profitable. And this is episode 6. Thank you guys for being with me all the way. We are getting close to master the market structure. And today we're going to talk about areas of liquidity. Areas of liquidity, or some people call it POI. So let's get into the lesson. Now, in the beginning of this series, I sum up the topics that we're going to learn in this series. And one of it was areas of liquidity. And in this aspect of liquidity, we have 2 episodes actually. So this is the first one concerning areas of liquidity. And the next episode, we're going to talk about liquidation process. So today we're just going to cover area of liquidities. Now, so when somebody tell you or somebody says area of liquidity, what does it mean? Or some people also can say POI, meaning point of interest. What does that mean? Okay, it is simply the areas where we have orders. Okay, areas filled with orders. So where a trader can target that area to place orders. So these are the areas of liquidity. Now, when we say liquidity, I already say this, that this is orders. Okay? And what are these orders? Simply buy orders or sell orders. Okay? And these orders can be in form of limit orders. That's why we have buy limit, sell limit, and it can be in stop orders. That's why we have stop orders, buy stop, sell stop, and all of market execution, meaning you just press the order instantly. Okay, now that we have we have an idea of what a liquidity is. Now, areas of liquidity is where a trader can position him or herself in terms of placing orders. Where are these areas that you can place orders? That is the question. Now, I'm going to take you a little bit far, okay? When we talk about liquidity, we have in market structure, we have internal, and external liquidities. What does that mean? So this is a structure, for example. All right, this is the structure. So when we mark this break of structure, that means this low here, this marks us as an area of liquidity, meaning this is the area where we can look for the places where we can place our orders. Good. Now, when we say internal liquidities, means these are areas of inside that structure. So inside here, we find internal liquidities, and external liquidity is simply the liquidities found outside this structure can be in this high or in this low. So outside this, whether it's up here or down here, is where we find external liquidity. All right, external liquidity. Now, areas of liquidity can be in form of many ways, okay? And I'm gonna try to make it very simple for you to understand, okay? Very simple to understand. Now, so ways that these areas of liquidity can be expressed can be in two ways. First of all, in terms of structure, okay? In terms of structure, or it can be in terms of candlesticks. So in terms of structure, it's simple. Whenever you find a break of structure, that area is an area of liquidity or a POI, okay? And I've already said, sometimes it can be inside here or external. External meaning we can find maybe another break of structure here, with meaning an outside formation or some features, okay, which the price can create. Now, we're not going to talk about that today, but just understand this scenario. But in terms of candlesticks, okay, we have so many. We can have in terms of wicks, wicks overlap, wicks overlap. When we say wicks overlap, meaning the wicks of two candles, wicks of two candles overlap each other. So this area, if you mark this area, this can be an area of liquidity where the price can come inside there and take some orders. You get the point. You get the point. So I'm going to talk about this a little bit more on the chart. So let's go to the chart. Okay, so this is Euro USD and this is 15 minutes time frame. We're going to talk about areas of liquidity, okay? Areas where you need to consider of placing an order, okay? Placing an order. So we can find here, so we see we have many break of structures and all that, but look at this here, okay? This was a structural break, and if you verify, we talked about in the previous episode, if you verify this structure using FTA time frame, which is 30 minutes, you can see it is a clear break. All right, it is a clear break. Now, so we can find out price. This is the area where we need to consider finding an entry. All right, finding the area where we can place our order. That's why the price came inside here and took some orders and went below. All right, I know many of you may be talking about, okay, where are we gonna place an entry? Come on, guys. We are not talking about entries today. We're just going to talk about areas where we can find entries, okay? The episode that we are going to talk about entries, it is the last episode, which is the episode 10. So if you want to know about entries, yeah, you have to subscribe. You know what to do. Subscribe, turn on the notification, and make sure you go with me throughout this series so that you can get entries and all that subject that you need. So this is the area where we find areas to place our orders. All right. Same applies here. Same applies here. This was a break of structure and it was valid. All right. But price did not respect this area Yes, and we're going to talk about that. Yes, we're going to talk about that, but this was the clean area where you can look for entries. And also we find another break of structure right here, right there. And if you verify that structure, this was a valid structure. So inside this area, we need to wait for the price to come in and look for areas to place an order. Just for a sneak peek, this here was the flip entry, and that's why the price just take that area and went down, and instead of coming all the way up. Yeah. We're going to talk about those entries in the last episode. So that was the areas of liquidity you can look for. All right. So this is many, guys. You can see here also, this was the breakout structure right there. And after that breakout structure, we see price coming inside to take some orders, and it went above. Clean as that, right? Also, this was an area of liquidity. So the price came in later on and took some orders and went up. You see, so price is not just going randomly. Whenever you see a price moving in a certain direction, you have to know that there is a certain order or liquidity that made that price to go in that direction. All right, always you have to know that. So we talked about this in terms of so we talked about in terms of structure, but we're going to talk a little bit more on in terms of candlesticks. In terms of candlesticks, I said we can find areas of liquidity in terms of wick to overlap, or sometimes in we say one candle formation. So in one candle formation, also we can find areas where we can place orders. What do I mean one candle formation? So whenever you find candles just printing that like this is bear, and then you find just one candle printing bullish, right? This, and then the market continues with their direction. So that candle, one candle formation, we can use that as our area of liquidity. So price may come there and take some order and go down. Let's go to the chart and look for some examples. All right, so this is Euro USD, and this is this is weekly time frame. And I have to warn you guys, if you find areas of liquidity in terms of candlesticks, you need to know that it's better to use higher time frame than the lower time frame. Yeah, I said it, higher time frame than the lower time frame. That is good. Okay. All right. So we can see here we had a strong bullish momentum, and inside this strong bullish momentum, we had different candle being printed. All right, bearish candles being printed. So those were areas of liquidity. Those were areas of liquidity. So you can see here, this candle here was the area of liquidity for this price here. So inside this area, we find this price coming inside and take the order. All right. Also, this was the area of liquidity. We can see price coming inside and take that order, and also it made this movement also. All right. Also, this one was an area of liquidity. can see price came here, take some orders, and went above. So whenever you find areas like this, it's very, very possible that price will respect that area. All right. So those are types of areas of liquidity. I just taught you 2 ways of identifying areas of liquidity in terms of structure and candles. So go on and practice those. Go on and practice those. It will help you a lot. And the last example in terms of wicks overlap, you can see here, after price came inside and take these orders from this one candle formation, we see price created a wick overlap. Here, this was a clean wick overlap, and you can see inside, and we had so many, but this one was clean and it was very, very visible. You can see price came inside and take that order. So you go on to the lower time frame and you refine that area to look for suitable for you to place an order. So that is how we find areas of liquidity. All right, so that's it for episode. I hope you have mastered some concept. So go on and practice those, and I'm sure it's going to help you a lot. So see you on episode 7, and the next episode we're going to talk about support and resistance. So thank you very much. See you on the next lesson.